Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, the 18th of October, 2022. I'm getting ready to watch basketball. The Bulls, I think, tonight are their first game. And a lot of the leagues are coming on tonight. I can't wait. One of my favorite sports. Had an epiphany today. Okay. In other words, the light bulb went on in my head. Going, why is the stock market acting so darn strong as you're not getting any help out of the bonds or notes? The dollar is slipping. I don't know that that means anything to it. It's not getting any help from any inflation stories, so to speak. There is a little break going on in energies. That could be helpful. The dollar, whatever's happening right now, is it really impacting the stock market? So I'm going, can't be all that. It's got to be one thing and one thing only. So let me bring you into my timing. As I'm thinking about it, I'm going, what are we and where are we right now? We don't have CPI. We don't have jobs data. The other reports of housing, we know they're all going to stink. We had a better report today on industrial production. Okay, but is that a market mover? Never. You know, it's friendly or not friendly, but not a true market mover. There's only one thing that's a mover right now in stocks: earnings. And the market had been set up the previous 2 quarters that we're going to run into a period where, with the headwind of the strong dollar and rising interest rates, which the Fed is nonstop raising the rates, that it's going to impact the companies, and that would do the job. Number 2, because it's a 2-part thing, we just came off the lows that we made challenging the June lows. And we did that just last week, right? And the market didn't find additional stops to build anything from. So as the earnings are coming out better than thought for this round, it's got a feeding frenzy. And what's happening is traders are saying, you know something, I thought the market had another 10% in it to the downside. Maybe it doesn't. Maybe that was it. And these earnings are better. I've got to nibble, buy. I got to do something. And the shorts are getting hurt because there's always shorts in the futures markets. For every long, there's a short. They are on the wrong side of the market, buying their way out and scratching their head. What is going on? Folks, I'm giving it to you. It's earnings. You've got Netflix beating. You've got United Airlines beating. J&J didn't do a very good job. The banks all came out. They're a beat. Goldman came out. It's a definite beat. So we're getting, at this phase of earnings, these earnings go on quite a while. So you're at the first good phase. And that keeps feeding on this market. Netflix today blew away what everybody thought. You know, you had 2 losing quarters of subscribers. Suddenly you got them back. And profitability went crazy. Now what the company's smartly doing is it's going to say to you right away, you know something, we're not going to tell you how many new subscribers we get and don't get. This is all about how much we're making for you per share, and that's what we're going to do. I don't like when that happens because that's how you get in and you can't figure things out, what is going on. But it doesn't matter. That's what gets the markets going. Now, how long do I think this lasts? Well, now we get to the interesting part of the epiphany. We're too soon on October 18th to worry about the 75 basis points that's baked in that the Fed's going to do. This has got only one thing, and it's better earnings, and that'll feed on itself till you suddenly either get up to key resistance points or the earnings aren't so good on a slew of companies that start to come out. That is where I think we're at. That said, do I think the bigger bear market on the weekly charts is over? The answer is no. Do I think it has as far to go as I might have thought a week ago? No. So I've changed my opinion because now here's what I'm saying. I'm saying that I think we have a 75 basis point hike baked in for November. 50 to 75 at least for December. Could be 100, but 50 minimum in my opinion. I'm not of the school of thought at all that that's the last one, as I heard a gentleman yesterday say. I think you go well into the first quarter, minimum. If inflation is sticky, into the second quarter. If it's not so sticky, that is where you flatten out. Well, so what does that do? We've already just gone and tested all those lows. Is that bearish enough, that headwind, enough to just crack the stock market real hard from the current lows we just made? And I don't think it is. I can see another 5% under those lows catching traders, but I'm not seeing another full leg. Something else would have to happen for that. So for the first time, I'm getting more open to look for a low in the market and the resumption of something to the upside. And the reason is because I am in the camp that the recession will be shallow as long as jobs hold up. It's that simple. But I do believe we're in a recession. I'm different than the other people. I don't need to be in a schoolroom. Oh, the unemployment's got to do this for a certain period of time and blah, blah. You're in a recession. In the S&P 500 index, this is what you're looking at, how the market got down there and you're getting your bounce. Okay, that was a closes only. So here we come up, your first resistance you're approaching, the last ladder high that you made. The market's got a pattern of higher lows, higher highs. That's an uptrend. It cleared the 18-day average of closes. That's important. It didn't just clear it today. Let's take a look together and step back here. It fought its battle on Monday and it closed over it. Then today being Tuesday, when the market gets itself up and over that high, that's the bull part of the market for me. Now I have the higher lows, higher highs over a settlement over the 18-day average, which means I have a number. Until 35.8850 is taken out, I'm in the bull camp, but that's 150 points away. It'll probably be another chart pattern raising that number for that to be realistic. Realizing that, because I've seen these patterns before, it's easier to say, where is the Bollinger Band? Because if it just keeps running, you got to get to 39.47. That's 210 points, 15 points away. That's an awful big move. I'm not saying you can't do it, but that's a big move. I think it's too big, and I think you got to be very careful with what that might do. So as I'm looking at tonight's action, I put on the Bollinger Band, I'm going, that's where it's going to be. So where I think the real resistance is going to come in on this is going to be this number, but something else is happening, and this is where I got the epiphany. For the first time, I'm seeing sideways action, true sideways action starting to early develop in the Bollinger Bands, which means this leg to the downside is over, but I'm not joining the camp that thinks you're just going to keep running to the upside. You want to go to the weekly charts and you get proof of that, but we'll do that over the weekend. When I look at momentum, we already have a reading of 70. I'm already overbought. The way I teach charting, anything over 70 is overbought. When I take a look at the whole thing together in the NASDAQ, what do I have? Okay, got an uptrend identical to the S&P coming up, not overbought. 58 reading is not an overbought reading. The bias is up, so give me a few good things in NASDAQ stocks, and why can't we get up to 113.51? When I come to the Dow, I'm already overbought, or the chart is overbought. The market hit the lower band. It's now gone to the upper Bollinger Band. Between here and the 100-day average, because that's not far away. 31,563 just isn't that far away from 30,743, okay? It's still 800 points. Don't get me wrong. It'll be hard to get there. You're at the resistance is the better way to say it. You could stretch, but you got to get great earnings, because there's not going to be any other data to move the market but that at this point in time. When we go to the Russell, I got an even better area for resistance. Number one, I'm overbought. What's the theme? 3 of the 4 indices are overbought. Only the NASDAQ is not. What's the theme? We're up to the upper Bollinger Bands. What's the theme? We're now approaching the 100-day average also. Is this the spot to start fresh buying? Absolutely not. Is it a reason or a place to be short? Absolutely not. It's a spot where if you caught it, I applaud you. I didn't see it coming. So what? Didn't lose money on it either. Sidelines. VIX. Okay. The VIX coming down. Could it slip back much? Probably not. Why? Because your Bollinger Band is going to be higher. It's at 28.55 right now. If we go to yesterday, Let's see if I can come back in here. No, one more day. There we go. Day before it was 27.84. Day before 27.36. So it's moving about 50 points a day. Logic tells me it'll be near 2,900 tomorrow. You're at 30.50. So if it's going to find support there, that ties in to a bit with my thinking. Bollinger Band stopping the stock market rally, and this stops the break here, and you start drifting into more of that sideways action. That's what I'm expecting to happen. Could I be wrong? Sure. Could I be right? Sure. Do I have anything at risk? No. 30-year bonds. There's nothing here that isn't overall bearish. The question is, are you going to embed again? So if this does embed and you're going to put higher interest rates on, the market, as I said, it's not phased in thinking about this at this point in time. It's not going to have the same impact that it would if you didn't have the earnings going on, because now you've got the juice going. It's like in a movie theater. You ever see the people opening their candy bars and they're watching the movie, they can't take their eyes off, and they're eating their popcorn and doing it. That's what they're doing now. They want each earnings report to come out and kick the market with it. This doesn't matter, but this is lurking there. Higher interest rates are still very much at play. In the 10-year note, you're still just oversold, not embedding. Not much you can do, trend down, but not trying to go sideways yet. Still very much in a downtrend. Dollar is nothing. Sideways action. And here you go again. You start looking for what are the Bollinger Band doing. You know, this was your breakout. When it narrows this much, it's like I teach traders. Think of a bottle that's sitting on your stove, the neck of the wine bottle, the body, the heat's on, the cork's on. It's going to burst out one way or the other, the fluid. Okay, shoot out the cork and everything goes one way. That's what happened to the upside in that market. You're not there. Now you're starting to develop the body of the bottle. You're starting to develop sideways action. And I think you'll stay sideways for a bit here because we're too far away from November 2nd to get anything really going just yet, where traders are going to talk again about CPI jobs data at the beginning of the November. You got what I'm saying? We're going to get the Fed meeting before all the key data comes out. As it works in the euro, if the dollar's going to go sideways, this is going to go sideways. And you pretty well see what it's beginning to do. Even momentum is flattened out on you. The British pound, higher lows, higher highs. Hard to believe that flash crash ended there. Is this over? Well, right now it is. The market, if anything, is in an uptrend. It's overbought. It's giving you plenty of reason not to buy when you're overbought. It hasn't been able to make it to an upper band or a lower band, sort of just caught here. We're going to get, in the coming days, the rest of Mr. Hunt's plan. We're going to see how the Bank of England does. At first, they weren't going to sell their corporate bonds. They're going out with that sale. They're going to keep shrinking their balance sheet. They're going to do what they have to do. Bank has to show independence. Here is the classic wine bottle laying on your stove. You can see it easy. I'm going to hide that part. So here's your bottle. Here's the neck of your wine. I hope you like wine. It could be white or red. It doesn't matter to me as long as it works. Heat spinning around, and eventually it's going to burst out one way or the other. So what traders are saying properly, and what TV analysts are properly saying, is volatility has come out of this market. It, if you'll notice, isn't running with the stock market to the upside. When's the last time nobody mentioned that, by the way, on TV. Generally, it's tied to the NASDAQ. It hasn't moved with it at all. It's broken away from that for whatever reason. The reason I don't know, I don't care. I'm a chartist. I just recognize what's going on, and that's where you're at right now. When I look at Brent versus WTI, you've went up to a new high difference of 790. When you're coming down here, you're fighting your battle at what number? If you're up to a Bollinger Band and you want to go back and do some thinking, I keep saying markets like to go back to the 18-day average to figure out what to do. What's the trend right now? Down. You closed under the 18-day average. You got lower highs, lower lows. The risk in the trade is rather large because you'd have to have a stop over the high right there if you wanted to go short. So what would that number be? Just to give you an idea, 95.11. So if one were a willing seller, for example, at the 18-day average, call it 90.90, where you're at right now, and you're going to put a stop there, I don't know many traders that willingly take on 400 points of risk in a full-size Brent contract. I don't know any, to be honest with you. So nice to do that, but I don't think you're attracting the crowd. You're bearish on WTI. So in our contracts, not the ICE, there's good volume in the mini contracts, 84.14, but I still don't like 400 points of risk, even though it's a small size contract. I think it's too much. Trend is down, bias down till you take out those highs. And on both contracts, the potential's there for the lower band. Does OPEC Plus look wrong in their idea about worrying about lack of demand? They do not. This chart action says they do not for the short term. Does that mean they did the right thing? Not going into the politics of it. I've done that before. Just don't want to go there tonight. That's where the market is, though, in a downtrend at this point. Why is President Biden releasing more strategic oil when you're in a downtrend? Does he have anybody that's an analyst that looks at this? Well, it doesn't matter. I forgot. It's midterms. Let's just get prices down so we buy votes. That's what it's about. When we look at the heating oil, all right, you're overbought. You're having some troubles right here. I look for the market to now waffle. Big support come in between 350.14, 350.14, 347.16. That's where the support, the combination of the 18 and the 100. But there's something else that's happening. We've had a lot of opportunity to talk about bearish crossovers. There could be a bullish crossover here, where all of a sudden the 18-day average of closes gets over the 100. If that happens, and it looks to me like it could by the end of the week, beginning of next week at the latest, if it just stays like this, you'd have the shortest term average, the 18 over the 100 over the 200. Where I went to charting school, that's a classic bullish crossover calling for a potential back to wherever the Bollinger Band is. Big possibility that that's a setup happening. Not the case in nat gas. You got a bearish crossover about to happen. The 18-day average is just over the 200. Markets under both, oversold under the band. So no, I'm not saying the traders are going to sell it here, but now we know where the resistance is. It's going to be big against the $6.90 to $7 level. That's where the pros are looking at this, and they're still coming down. Even in Europe, their gas prices are coming down. All you need to do to change these markets is provide supply. We know the demand's there. If you can overwhelm demand with supply, prices come down. That does not mean that everybody doesn't need more gas and so on in Europe. I'm not saying that. But I'm saying this is October 18th. We are not in the dead of winter. As they get through what they need, there's still the big question of what happens. In America, until we can get these exports out of the country, out of Freeport, which I read a report tonight that does think in the latter part of November that Texas terminal is going to open again and we're going to be able to start shipping out nat gas. But until then, as I told you, 16% of what we normally ship goes through that terminal. And it's not going, it's staying home. This is the impact of that over time. So mild weather. We're not freezing. We set record lows. I know this sounds funny when I say this. We set record lows in many parts of the country today. That's leaving. Chicago was in the 20s and 30s just now. We're going to be 70 on Saturday again. So we're in this, which is typical at this time of the year. It's the lasting cold that you worry about. When suddenly you're not going to go to 70 anymore. In fact, you'll be lucky to get to 60. You start dropping away in many parts of the country, and that's when the demand for this is going to come back. But as I said, I think I have an understanding now of what the markets did, and I'll be talking about it in even more detail in the morning as I talk to my morning subscriber videos. So don't go away. If you watch what I do here, you got to love what I do in the morning because I go through 40 charts. Buy here, sell there, do this. I start you off with the daily fundamentals. What's going on in Asia, Europe? What are the reports of the day coming out? I do it in such a way where I make it easy for you to view. I know you may not want to see the grain market. You might want to just go to the energy. So at the bottom of the scroll bar, you pull it, boom. It's lighting up and telling you what section you're in big letters like that on our website, so you get to see it. For those of you that can't visit the website, well, we give you free with it our phone app. And on our phone app, you're going to see it works similar. We can't put the names that it says you left or just going by grains into the other parts. That's all it won't do. Everything else is there, though, for you. So how do you get this? How do you look at it and so on? Go to our website under market research. It's all laid out there for you. It's very, very easy to work with. What else can you do? Follow my magic finger, take your cursor up here, give a click, and away you go. You'll be right on the page you need. I'm Ira Epstein. You have a good day. Talk to you tomorrow.